What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Kodak stock, ticker symbol KODK, on a variety of time frames in anticipation of the next trading day, Monday, March 4th. Well, guys, Kodak stock on Friday finished the day up 6.37%, 34 cents a share. Of course, we got the news on kind of late in Thursday's trading that Kodak is weighing a pension reversion, which would obviously, give them a substantial amount of capital. But let's focus on Monday's trading day. Take a look at Friday's trading day, pull out any bias that we possibly can out of the market, out of the options chain, and take a look at levels to watch come Monday. Listen, if you're new here, you have not done so already, please subscribe to the channel. I have a big goal. I'm trying to hit 5,000 subs by market open Monday. It's not going to happen without your help. It's a bold goal, but I'm hoping to get there, so please do so. I'll continue to provide value. Let's start here on Kodak with our daily ritual on the 5-minute chart, taking a look at the volume profile. What I'm looking for is obvious changes in volume, right, that correlate with big changes, or obvious changes more so, in stock price, and then looking at all that through the lens of time of day context. So two things that I'm kind of looking at here. I'm looking at this push that we got in the first about hour and 15 minutes of trading. And when I'm looking at this, I mean, contextually speaking, we expect to see a fade in volume, okay? However, I think that by the time that move was over and we ended up in this consolidation period, volume was substantially lower. And we did see a little bit of holdout in terms of volume during that net positive move to the upside, okay? But then additionally, we saw that push midday and then big fade. And what we saw here was actually, it was a little bit choppy. We saw a little bit of additional volume to the bearish side. However, when you're looking at two bars like this with a much smaller bar in the middle, to me, it's not really definitive enough to pull anything out of that. But bulls, just understand that you're going to have some bears in chat rooms or whatever tonight over the weekend looking at, I guess, this volume in particular, this volume bar in particular, and saying, hey, look at that bigger red candle in the afternoon. That was on high volume. Bears won that candle, if not, that entire 15 minutes. However, truthfully, the stock recovered and consolidated into the close, and it was just one volume bar. It's not contextual enough for me to really pull anything out of that. So let's move on here to the 30-minute chart and take a look at levels that I'm paying particularly close attention to come Monday. Now, as you guys know, I'm always using, well, first of all, TA to me, I fully believe is a self-fulfilling prophecy. This is nothing but psychology, okay? So that being my belief, I only ever want to use, and you'll notice that the majority of my charts are very simple, perhaps with the exception of the 1-minute intraday. But the reason for that is because I'm typically scalping a variety of different playbook plays off of that same chart. But the longer term time frames are as simple as possible because all I really want are what's most popular, what has the most eyeballs, the 200 period and the 50 period moving averages. So here on the 30-minute, what's really interesting, and you'll hear me say this a lot, we had a big upside move in Kodak, right? And this 50 period on the 30-minute, which is going to be a quicker moving average, right? It's a shorter time frame with a shorter it's the 50-day, it's not the 200-day or period, right? So the 50 period on the 30-minute is going to be the quickest moving out of the, I suppose you could say, 6 moving averages that we're going to look at here on the 3 different time frames, because we have 2 on each. And when we see big upside moves in stocks, I always want to get as many psychological barriers to the downside as possible up underneath the move as quickly as possible. I'll typically say get some feet up underneath that big move and add some psychological barriers that the bears would have to kind of get through, jump over. And we saw a big move out of that 50 period here today on the 30-minute. I mean, it closed on Thursday at about 360, and it's now over a huge psychological level of $5 a share with the stock at 560. That's a really great thing to see. But again, just one factor of many. Okay, so come Monday, if we see any downside test of the 50 period, obviously as a bull, I'd want to see a high volume bounce away from there. Bears, your goal on the 30-minute chart really is to ideally see a flattening out, kind of a less aggressive upside move in that 50 period, whereas bulls, you would want this thing moving upside as quickly as possible. And bears, you'd want to see this flatten out and a downside break on high volume. Okay, bulls, you want this thing really accelerating, and any backside test of that, a high volume bounce away from that level, okay? Now, let's move on here to the 4-hour chart. This thing is going to take its time, okay? Looking at the 4-hour here, you can see that those moving averages are way down 376, 370, right? They're not incredibly relevant here in the near term. I mean, I'm always watching the 4-hour, even in situations like this. Like if you're a bull, you do ideally want to see that 50 period in particular moving upside, ideally getting above 4 here in maybe the next couple of days. Okay, but aside from that, I think we can get even more context by looking at the daily. Okay, let's look here at the daily. We have to go back a little ways here to really get the full picture here on Kodak. Now, earnings are coming up on March 14th. Okay, just be aware of that. Of course, not immediately relevant. This video is primarily focused on Monday. But when we're looking at a daily chart, I always want the most obvious picture possible. The daily chart has the most eyeballs. It's going to be the most consistent chart that funds, institutions, retail traders, and retail investors all look at on every single security, essentially. And that makes it an especially good candidate for that self-fulfilling prophecy psychological approach to TA. So here's what I always say. You want to look at the daily chart as anyone off the street who has sort of an understanding of stock charts. I mean, they know what's going on, right? But not much else. What is the story that person would tell you about what to look for on the next trading day? And that is the most obvious picture that the majority of eyeballs, or at least the most eyeballs, are going to be on. That's the one I want to look at. And listen, for me, the most obvious story is going to be half dollars and whole dollars. So if I'm a bull looking at Kodak stock come Monday, I'm thinking two things. Hold 550 as a support, ideally on as much volume as possible. And again, on as much volume as possible, you know, it's time to start thinking about potentially looking at 6, the next whole dollar, right? And if you're a bear, it's really simple here on the daily. Just a downside break of 550 on anything other than below average volume, I think would be sufficient. You just don't want tiny volume on the downside break. It's not very definitive. Get below 550, head back down toward 5, because if you're a bear on Kodak, what's your ultimate goal here, at least in the near term? Get back below that huge psychological level of $5 a share. Bulls, obviously you don't really want to have a retest in the near term of $5 a share, so 550, a hold of 550 could kind of get you away from that. Head up towards 6 ideally, because 6 is kind of like the more near term goal, that next whole dollar. Now, although I don't expect massive volume, let's take a look at the options chain and see what was the bias here in the chain on Kodak stock on Friday as traders positioned themselves heading into Monday. Volume is low, okay? Take this with a grain of salt, but it's worth looking at. We had about 23,700 total contracts, 10,000 calls, about 13,700 puts. Now, if we break this down by time frame, if you look at the very, very short term, the 0 to 20 delta range, we actually are seeing a pretty put-heavy bias. But again, volume is so low that one trader could come in and buy 3,700 puts very far out of the money for cheap and throw off that entire bias. So you have to consider that. And then, of course, again, volume's very low, but as you get, to the in the money, on average, longer term sentiment contracts, it leans heavily to the call side. Listen, interesting to look at, but the lower the volume, the more of a grain of salt you have to take the chain with. If you got value out of this video, please subscribe to the channel. I appreciate it, and I'll see you next week.